Hello, welcome everybody. I'm Bonnie Helper. I write the weekly Startup One Step newsletter, and I also work with, I'll put the link in the chat, and I also work with founders on their pitch decks and their executive summaries, and even do ghostwriting and make introductions to strategics and investors where and when appropriate. Then every 2 weeks, we host an online Insights with an Investor. And this week we have Atul Prashar. Atul and I go way back. But first, I want to thank Joseph Katz for hosting us. Joseph, tell us about you.
Thank you, Bonnie. Good morning, everyone. Joseph Katz, marketing guy, primarily work with startups, help them go from unknown to well-known using strategic marketing, growth, go-to-market strategy, that sort of thing. Happy to chat one-on-one with anyone. I suggest everyone put their contact information in the chat because we do want to keep the intros short.
So, Atul, we either do it one or two ways. You can talk about yourself and your funds and your investment strategy, or we can go around the room and have everybody briefly introduce themselves. Which one would you prefer?
Let's do that. Everyone introduce themselves, and then put your LinkedIn profile in the chat if you don't mind. But I would love to hear about everyone's background.
Right, and I do want to warn the listening audience that if this devolves into football chatter, that's how we started, and I have no control over that. I've been working on it. So anyway, Carrie Fox, take it away.
Hi, I'm Carrie Fox. My company is Stealth Pictures. We identify, develop, and leverage IP for today's marketplace. Some of the current projects I have right now are David Bowie, Martha Stewart, and photographer Robert Frank, among others.
Thank you. Carol.
Sure. Carol Donahue, data scientist in Toronto, and I work on data science advisory and AI integration into product.
Thank you. Craig.
You call me Bonnie?
Yes, I did.
Oh,
I saw
very
you.
cool. Atul, thank you for taking Joseph. Bonnie, always thank you for including me. I'm with Chase Business Banking in Beverly Hills. That's my day job, as you see behind me, which I love to throw up, and Bonnie's a fan. My real passion is AI art. And so my time after hours is spent really trying to bring editorial art back to the importance, because word seems to have captured everyone. And so I've been working on pitching and proposing editorial art back to a lot of the purveyors. So I'm hoping to be able to forge into that area after hours. Thanks, everyone.
Thank you. Michael.
Hi, I'm Michael Nathans. I'm the CEO of Whisper Sound Corporation. We are a medical device and informatics company, and we are bringing a breakthrough treatment for sleep apnea and snoring through the FDA, and we're currently offering a Series A round.
Oh, nice.
Wow.
Ian.
Good morning, everybody. Ian Garmaze. I'm based in Toronto, but I am the COO of a virtual film school. So we are a live online training program for aspiring influencers. And very happy to be here.
Catherine. You're muted right now, Catherine.
Sorry, I had to unmute. I founded Branscombe International, my company, after working in film and television for many years before that. So basically we're in kids, media, family, entertainment, original IP, and also some branded entertainment as well.
Thank you. John.
Hello, everybody. My name is John. Sorry, something popped up on my screen. I found out about this through Angel Span.
Right.
Yeah, Bonnie, you had put the link in there, so thank you very much for that. I work as a fractional healthcare executive based in Los Angeles, but I also enjoy the sports and entertainment space, so I'm looking to make connections and meet new people that way. I do have someone who's looking for investment in a Lionsgate distributed film coming up, so if anybody's interested, please hit me up.
Well, Tool certainly knows sports and entertainment. Those two are his bailiwick. Patrick.
Hi, hey Joseph. Good morning, everyone. Patrick Fraley. I'm a lower middle market investment banker. We focus on sell-side M&A. We love working with founders. We're based in New York, and we're primarily focused in fund admin, and where I focus is in healthcare, so healthcare services, healthcare IT. look forward to talking with everyone today.
Ah, thank you. Scott.
Hey, Scott Purdy-Sine. I'm one of the founders. We make a product that will take multiple inputs of videos from anywhere, any place in the world, and in a very short amount of time, make a professional quality movie when it's finished. And I have some common, that's one of the things to do. The other thing I do is I'm an actor, growing a little beard for a part Saturday. He told me to. So I see Catherine and John are kind of in the same industry as I'm at. So I do a lot of different things.
Yeah.
Oh, and Craig, I guess you follow Chris Land on LinkedIn.
Oh,
Yeah, every day he's got a new art thing like you have there posted.
oh, I know Chris as well, of course.
Yeah, every day he's posting several times actually new kind of AI art that he loves.
Oh. Atul, take it away.
This is awesome. I love your backgrounds. And so I'll tee it up and then we'll jump into just all of us. And hopefully we get back to football at some point. This is this is going to be awesome. Look, I've known Bonnie for several years, and she's just you're a firecracker. I have to give it to you. Yeah, I love how you make
Mom,
relevant.
I forgot to introduce Mom. I'm sorry. I forgot what this.
Let's get in there.
So I'll do a quick intro.
I'm sorry too.
Lon Taylor down in South Florida. I also know Bonnie for many years from New York. I run a market research company called First Insights. Most of our clients are enterprise level firms. We do usability testing, focus groups, ethnographic research, that type of study. But we also, over the past 2 years, have gotten involved in working with a lot of startups as a mentor, and just love the energy that comes with the startups. So happy to chat with anyone post call.
Okay, Atul, take it away. You were singing my praises, and God, I did not to interrupt
Well, I'm
you.
done with that. I'm just kidding. No, you've been phenomenal, and you do make very relevant connections, and that we can expand our horizons and maybe the people that we can work with. I don't like to say network. It's just so easy to say networking, but it is high quality community and networking, what you provide for everyone. And I appreciate that. I've always appreciated that about you. And we're looking at some things together. I think someone on this call mentioned one of the names, that we were talking about just the other day. So of a project that maybe he's involved with as well. So let's see what we can do there. I love all your backgrounds. This is really exciting. I didn't know what we were going to come into, but I met some of you at the Chris Land event as well a few weeks back. But it was these backgrounds are awesome. I think there's a lot of synergy and overlap. So I'll just tee it up a little bit, and then let's jump back into everyone going into. So my career, I'll give you the hierarchy of it. Techie, software developer when I first came out of undergrad as a young kid, 20s. Knew I wasn't going to be Bill Gates or someone of that profound stature in that space. So I always wanted to be in the music industry. So I moved to New York for that reason. So I was a performing singer-songwriter guy, and I had gotten pretty far for the most part. And then I started just licensing music to a lot of, some are great shows, some are horrible shows. Some on the CW, they're kind of more aimed at, a lot of them I didn't even watch, but they licensed it and they're still in syndication. So you can just go through that list, CW shows of a certain era, Beverly Hills 90210 and Melrose Place to Gossip Girl, all these. And then CSI New York, for some reason, is in syndication in New Zealand. So we still get residuals every 3 months, which is nice. And then a couple Bollywood films and I worked with a lot of urban artists on Sony Records imprints. So that was a good time. And then I knew I needed some marketing skill sets. So I went back and I was doing this part-time to get my MBA because I didn't have that skill set. But then I took one finance class and fell in love with that. So I quickly pivoted and went deep into that space and was at a hedge fund after graduation for a short stint. And short stint would have been meaning a couple of years after the great financial recession. So 2009-ish is that after we felt some friction in the market. So essentially, we suspended operations, meaning we tanked. Like a lot of funds and people on Wall Street were kind of let go. I was a guy with 18 months to 24 months of experience versus people, ladies and gentlemen, who had 10 years plus on me. So they were going to hire them before me. I get it. So I had it, but I loved finance. My whole dream was to work in finance at this hedge fund, get to collect the bonuses for like 5 years, and then go back into the music industry, and kind of thought I could call some shots in a way. Truncated got there faster because of the market told me, hey, let's get you there faster, essentially. And so I launched a fund. We got together with a hedge fund guy and a music executive, and we started something we looked at a few projects, got together, and they blossomed pretty well. We said, let's add some infrastructure here, created a fund. So that was the venture group, kind of launched into a bunch of different things. And we've pivoted into doing disruptive tech in sports and media. Excuse me. So that's that. Fund number 2 was going to be launching during the pandemic. We found an opportunity to get involved with more. There's so much, as you all know, there's investment bankers here, everyone from different plethora of backgrounds. There's a tremendous amount of capital that just flooded the markets. So there's so many different opportunities that was good and bad, right? Drove the valuations out of whack. We're finally seeing that settle down now, and which is why you see a lot of funds shuttering, because a lot of people didn't know how to deploy that capital effectively. So because there's just too much and they're being incredibly inefficient. So we did a lot of syndicates, and Bonnie knows this. This is how we chat about a lot of deal flow all the time. We started doing deals through our kind of phone. Essentially, we were, it used to be very regional. As anyone that knows the VC space, it expanded to a global effort, and you're in rooms with people that you usually weren't in rooms with, and it's kind of exciting, and it makes your job a little harder, but it's actually exciting as well. So we're looking still at disruptive tech and sports and media, but through like 4 or 5 syndicate groups. So there's 2 of us that are in all of these groups, and then friends who are kind of disciplined in certain arenas, they'll jump in and we'll do deals together, which I really appreciate that, because I think we wanted that more than the second fund cycle, because we all have children around the same age. We wanted to be a part of those lives, because that once they hit certain teenage years, they're not going to want to be hanging out with us anymore. So we thought, let's do this. The hours are still chaotic, but they're flexibly chaotic. So we can do things after they go to sleep, and, but we still get to attend their basketball games. So that's kind of how we made this decision for the next few years, at least. And then it actually took off and it worked. So we're probably going to keep this running for a while. Earlier this year, we launched it. This is where there's some overlap with some other folks here, is we launched a film fund. We are backing South Asian female storytellers. So some of those are impact type films, some of the, whatever they are, but it's like a startup. We looked at 70 scripts, got involved with 5, and 2 of those they were concept films. We want to flip into feature films. And we really are tripling down, not even doubling down, but on the horror suspense arena, because there's a quicker ROI. I'm a scale guy. So I want to scale an ROI guy. So there's some great, and this director we're working with, she's an incredible storyteller, and she does it budget friendly, which I love. And that's common in that space, apparently. Michael Bloom kind of is known for that, budget friendly scripts and films, and with tremendous ROI. We're trying to just adopt what he's, and maybe several others in that space, have been doing all along. And so that's another thing. So we're launching. So we've had successes here. Quite a few. 2 films premiered at a film festival last month. So a lot of people came to us and said, we want to be involved in Fund 2. We're launching that 2025. That's smaller than our venture group and our syndicate groups, but there are some LPs that are coming on to be in that space because they like kind of the work. And we appreciate that, because I think the more stories we can tell, and the broader we can expand the reach and work with fun people and tell incredible stories is what we're looking for. The other thing we do, I'm an adjunct professor as well. So I teach venture capital and the business of sports media to MBAs at Gabelli School of Business, Fordham, and Lincoln Center. And I really enjoy that. My father was a techie engineer, became an adjunct and full-time later in life. I asked him why he did it. And he said, it's the students. You learn a lot from them as you're teaching them. They're imparting so much wisdom. You're collecting, you're absorbing so much. And it's absolutely true. I've been doing it for 3 years now. I thought I would do it for just about 3 and then tap out. I really enjoy it. It's just a great experience. And then hopefully we're impacting their lives as much as they're impacting mine, but they're great. And then I bring them onto my podcast. So that's another thing we do. So if anyone wants to come on, Bonnie's going to come on. Just Bonnie and I have to figure out how we can control ourselves and not go 4 hours on a 30-minute conversation. So we're going to have to figure that out. But it's called the Whiskey Hue, because we do sip a little whiskey and we tell stories. We work with the guests we have on our business and sports executives, founders, a lot of athletes, just people that I invest with. I think interesting stories that we could tell. And generally they're athletes who have played in the NBA or NFL who now are in the venture or startup space ecosystem. So those are the kind of stories I like to tell. So we had an MMA fighter, Daniel Puder, who's an undefeated MMA fighter, and just released that this week. He came out last week. Someone from the Seattle Seahawks. He's now getting into venture. Josh Turner, he came on. We've had Ray Austin, drafted by the Jets, won a title with Peyton Manning at U of T, drafted by the Jets, played for my horrible Bears a while back. And now he raised $50 million for fan controlled football, which is fans controlling the actual arena football game through their phone, calling plays and all that. It's awesome. Worked during the pandemic. Then when everything opened up afterwards, that's when they saw some friction. They're launching fan controlled baseball now. he's doing a lot of different things. So that's kind of the space I play in, and open to any conversations that you may have. And we do philanthropy. I'll say this, I know there's a lot more males here, but then this is something that I became aware of. Grew up male dominated. I have 2 boys. All my cousins, we had 3 female cousins out of 90% male. Something we didn't understand and we became privy to is that my dad started this. I'm giving him full credit. And my brother and I are taking it on, is in rural communities and kind of emerging economies. So in South Asia and India, in our case, they didn't have proper bathrooms. So when girls reached a menstruation age, they would stop going to school because there weren't proper bathrooms for them. You get the social stigma, you get the education imparity, social imparity, and then income imparity. So we thought if we can just stop it here, then we can just get it. So we started building bathrooms, and then it's impacted thousands. And I think we're going to take it on, and we have a turnkey solution. So we're working on that. So if any of that is relevant to any of you, we could chat about any of it. But I would love to. I think there's so many synergies among all of us here. I would love to hear more stories about what you're doing. So that's kind of my background in a nutshell.
By the way, I just wanted to say your family sounds like my family. My grandmother had 13 sons because she really wanted, great-grandmother, she really wanted a boy, girl, never got one. I had 9 nephews before we had our first girl. But
I was going to say the Jewish person from South Asia, but that's not me or you. Although, so one little pivot fact. So before they used to call them talkie, when films when they were silent films back in the day, there was a huge prevalence of Jewish women that were the Bollywood stars in India before. But then when they turned on, then you could say have sound. Then they realized they couldn't speak the language as well. They're nice to look at, but they wouldn't. So in South Asian, women weren't allowed to work out of the home in the 20s or 30s, whatever it was back then. But Jewish women were allowed to. So they used to take all these awesome film roles and they became superstars. But then when it turned into like this whole flip the script and you had to start speaking the language, then they couldn't. Some of them went back and learned, and then remained relevant. But that's I don't know, that was useless information, but I have a ton of that. So let's keep going.
Questions? Anybody have a question?
I have a question. Atul, I was looking at your profile. I noticed that you do invest in projects connected with influencers. And so what is currently going on with you in that area?
Well, there might be a me and me. Maybe we could work together on this. May I share something with you? So here's the thing. I'm a scale guy. This whole teaching in a classroom, I love it because there's that one-on-one interaction with people. There's 35 students you can take over a 4-month period, let's call it, right? And the whole semester. But I'm a scale guy as well. So I would love to do in the same amount of time, teach 1,000 or 10,000 students. So what I've done is I've taken that whole course that I teach and I've created, I know people much younger than me who will not watch 3 hours of content straight. But I broke it into, I know my kids so as well, and people older than them, I created a venture capital series, which I put on kajabi.com. Bonnie and I were chatting about this, but I need an influencer for that to help me out. So what I've done, I've created this whole series. It's basically 35 videos, venture capital, ideation through execution, raising capital, term sheets, capital, but we do it in a really fun manner. I basically recorded my voice over my PowerPoint, sent it to a group. They edited it, made it look beautiful in my opinion. But so we created they're 4-minute videos, roughly 35 of them, 3 hours total of content. And then for those, I know that to promote them, we created for social media, TikTok, Instagram, LinkedIn now even has this 30 to 45 second ESPN highlights of those videos. So it's like 35, 40 of those. So I was literally chatting with 2 people this week about some influencers that helped me kind of do that social media rollout. May I share one of the videos with you? Like I won't share the whole thing.
Sure.
I think that'd be kind of boring for you all. But I'll share like
that.
And if you can figure out we could collaborate, I would be open to that. That'd be awesome. And I won't make you watch the whole thing, but I'll just skim through some of the stuff. Boom.
I also just want to mention to both Ian and you that before I retired, I worked at a college in the last 17 years. I was in the distance learning. In the last 5, I was a director of distance. So I have a lot of experience in online and hybrid classes. So
okay,
if there's anything you ever want to run by me regarding that, I have 17 years in that area.
Oh, that'd be awesome.
To
help. So here's what, that'd be, I think so.
Before you jump in, I worked for 10 plus years in for-profit ed as well.
Oh,
Marketing for-profit ed.
Let's collaborate then. I will share this and I won't do the whole thing again. So,
I
but
was
boom,
wrong.
here.
Welcome back. In this
I
video
was wrong
series, we're
about
going to
that.
discuss
Nope.
You're
Series
showing
B
a LinkedIn
financing
screen.
and its
Yeah,
Oh, it's not showing this? Shoot.
Yeah, you got to
LinkedIn.
switch the frame in LinkedIn, in
I
Zoom.
thought I did. Here, let me go back. Let me do it again. Sorry, thank you for pointing that out. And boom, this should be it. Is this working now?
Takes a few seconds.
Yeah, it's loading.
there we go.
That's it.
Series,
That's it.
Series B financing. Okay, give this a shot. Thank you. for
Welcome
that.
back. In this video series, we're going to discuss Series B financing and its impact on the investor, the founder shares, and how it's depicted in the cap table. So again, the legend: yellow, pre-money valuations, previous number of shares; blue, post-money valuation, number of shares; and green, aggregate amount of shares.
I'll skip ahead here. Boom.
That's $2 million new dollars for 300,000 newly issued shares. So 1.2 million shares outstanding prior to this new round, plus this new 300,000 newly issued shares get you to 1.5 million total shares after
Simplistically get in there. I'm gonna skip ahead here.
multiplied by the total post-investment shares divided by the shares issued for the new investment of $10 million.
So you get post money valuation. Then I'm going to hit how it impacts the cap table. So I'll show you that.
83.3 is worth more. The investor has 200,000. Series B investor was not there in the pre-financing round. Ownership stake was, as you saw from the previous round, 83.3%, and 16.6% for the Series A investor equals your 100% total. Now, post-financing, after the Series B, the number of shares is 1 million plus 200,000 for Series A investor, plus the 300,000 new shares for the Series B investor. You have 1.5 million shares. So the number of shares has gone up, and the ownership stake has gone down for everyone. So the owner now owns 66.67% of their own.
Get there. Skip ahead.
Series B
and then you
investor
see the
had
cap table right
negotiated
here.
20% ownership stake in here, in this company. So that's where we arrive. So that's
kind of what I'm trying. So here's the thing. So I've created the reason I shared that with you is because I would love to help. In a nutshell, a lot of people would always ask me, "Hey, can you teach me a little bit about this?" Anytime any of us would speak anywhere, can you teach me how to do some of this or how to navigate and look at a deal, the complexities around it, what the trend is, and how I can capitalize on these trends? I want to get into venture. I have some capital I'd love to spend in this space. I'm always telling them, go to public markets first, get your feet wet there, then come into the private markets, private equity arena, PE, VC area. But I couldn't take every call after a while. It just became too numerous. And a lot of athletes, they said, I just became friends with them. People who I live near the Giant Stadium before, so I used to, in West New York. So like people I would see in that all arena, a lot of players live there to get the views, and then they can have easy access to their stadium. So they would ask me all the time over whiskey when we're drinking, having a good time, how do I look at this deal, navigate, and see what I can draw from it as far as value extraction? I put X amount here, what can it become? I couldn't take all those calls all the time. They said, well, I started telling them, I started teaching them kind of, isolated experiences. And then they said, well, my friends would love to hear about this. So that's kind of how it came. I'm actually speaking to the NFL alumni group. It's very slow moving. I shouldn't probably say that on video, but it's like academia. Academia is very slow moving. And so are these kind of behemoths that they want to make sure that people are vetted. They trust me because I don't take advantage of these relationships, but also it's just very slow moving, and I'm impatient, so I'm trying to figure that out. But I saw, let's put together the series, and I don't have to be there in every room to kind of put it. People can take it on demand. It's like a freemium model. I want it to be, I'm not trying to make a killing on it. I just, I'll probably just pay for my cost, but that's why I put it on kajabi.com. That seemed to be the best platform. I might move my podcast there because I think there's ways to integrate all of it well, because we interview the same types of people that are looking at these deals. But that's why I put the course together. But then, now that it's up there, I need to tell people that it's up there. So I think we can help more than all these people. So the influence. So Ian, I would love to chat with you.
Oh yeah, I'm definitely going to follow up. And what you were saying about scaling, that's pretty much what we do. But we do it live because of the nature of what we're teaching. It's a kind of a project-based course where people have to be taught interactively, with the professor, the teaching assistant. So we have a model which is scalable up to like maybe 1,000 students simultaneously.
Awesome.
And
Oh
so
yes,
we'll definitely meet up and we can tell you more about
That'd
it.
be fantastic. And Toronto's a beautiful city. My sister-in-law went to school there.
Oh, yeah.
I was going to say, do you want to put the link to the videos in the chat?
Yeah, so I do, but guess what? Fool.com is not ready. No, so all the videos are loaded properly, but my team and I, we're trying to figure out like how to get that link out properly vetted. So do you mind if I share that with you at another time? I will definitely love to.
Okay,
I'm not trying to make a killing on it, but I'll do a heavy discount for you, Bonnie, but like I'm just trying to pay for the videos. That's all.
yeah,
You
so I'll put it in the
know?
Yeah, well,
when you're ready, I'll put in the newsletter.
And it's like 100 some at the most. I mean, it's going to be higher for other places, but for this group,
Yeah.
even less than that probably. Like, so I'm cool with that.
Yeah.
And it's 40 videos telling you exactly how to navigate this whole space. And then I'm doing a complexer, like my English, a more complex version of it, like the 301, 401 level, because people want to go there as well. But I made it simple enough that any deal you're looking at, you could put your numbers into that and see how it impacted. So you can see all the formulas. Because I don't learn that well from sitting in a classroom and just listening to someone. I like that heavy engagement,
Yeah.
and I did it that way. And I have to give it to the editors. They were phenomenal as far as making it kind of very aesthetically beautiful. That was the easiest video, the plainest video, but they've done some really cool stuff moving around, kind of like Bonnie's background. Yeah.
Like, are either of you using a platform like Ian? Do you use a platform like a Canvas or anything for your thing, or did you make your own?
We do use Canvas. We have an accreditation partner, and they provide us with a kind of a custom version of Canvas. So we use that.
Okay.
Yeah.
And Ian, I might even chat with you because for my upcoming, they have me teaching a pure venture capital class to another group that I had never done it before. Undergraduate. I've always done MBAs, but I said, let me just help them out on this one because they needed someone to fill in for a semester. I said, okay, but those classes are much longer and they get a lot more homework than MBAs, I realized.
Right.
So I'm creating a new set of slides because we're gonna have a lot more time in the classroom. So
Right.
I might, if you know someone,
Oh, well, I mean, I've taken both the Venture Deals course, which was really intensive, and the Laconia Capital course recently. So I've got some exposure to the sector, and I think from what I saw of your video, I think you're hitting some notes that they were missing.
Oh, awesome.
It's
Okay,
just
good.
my guess,
Yeah.
because like very clear presentation, very easy to understand. It's a rather tricky area, I would say.
And I think you'll need an amalgamation of all of these to kind of really nail it, right? Because this venture is such a influx area, so there's a lot of volatility in that space, which is why I love it because I'm a chaotic kind of person. But just I think all of these together would help you be right and step right into the city. That's why no one should charge a ton for these things. Put it at a reasonable rate, just to so they can get access to it, and then actually go and start performing and actually earn the capital they want to earn in this space. Yeah,
and I may know some influencers that you could talk to who might be able to help you out.
That'd be awesome. Thank you.
So we'll be in touch.
May I ask a question?
Yes.
Yeah.
So Atul, so it's very interesting as someone who's specialized in entertainment, specifically in music banking, right? Which at least you can perfect. I'm interested to hear, and I'm always fascinated, someone like you, where you've got people that are entrusting you, right? And you're creating a fund. It sounds like you chose a very interesting angle on the entertainment side, right? Something that I dare to say is far more imperfect than perfect, right? And generally with venture, you're wanting to provide perfection. So I'd love to hear about how you gravitated to something like that that is such high risk. And as a part B to that question is how you were able to get the trust from your investors in order to go into a fund with something that obviously, right, can create more unpredictability than predictability.
So great question, and I'll tee it up this way. That you've heard that term smart money versus, let's say, dumb money, but not so smart money, right? All that means is you have deep expertise in a certain arena. So if someone pitches something, if Moderna was pitched to me 6 years ago, I wouldn't have known what to do. My wife works in healthcare. She could have looked at it, but I don't have the relationships to unlock the tremendous value once we support it with resources at the foundation level to unlock the true value of what it could be. In this space, I happen to have relationships because I was in the music industry. I know tech decent. I knew it pretty well back in the day. It's changed quite a bit. It's evolved quite a bit. So obviously I have enough to get myself to be dangerous and break things, but enough to say I know when someone's kind of just pulling my leg or something on what can actually be delivered through some tech. So I know tech well. I know music industry and media and sports pretty well. I can unlock. So if you have an app that would help an NFL or an NBA athlete perform better, if we get behind it, we can walk it right to those folks and we establish those relationships because we would be sitting in the rooms with these people and most people would fanboy. I'm fanboying over a lot of these guys as well because I watch them perform and hopefully beat up the Packers every week or whatever it is, or I'm in awe of their talent on the field and then they want to learn how we do our business. So that's how a lot of these conversations happen. So there's kind of a give and exchange. How can we jump into this space? Venture capital is sexy. It's not for everyone. It's actually unglamorous. But outside of this world, it's very sexy. It's kind of like, entertainment. It's not that fun. Now you hear a lot of the horror stories. When I saw in the music industry, I saw a lot of things as well, right? Not what you're hearing on TV, but like you say, oh, it's not as glamorous as we think it is once you're not in it, when you're from the outside. And it's, but working hard, I'm okay with. But working hard, and there's other market dynamics that have to play in your favor to make sure you can earn a living at the space. That's kind of the unique angle to it. So coming here, I realized I was taken advantage of so I said, I'm never going to do that. And I didn't. And then people saw that, and then it kind of just resonated. And they opened up their networks to me, that word that I don't like to use, communities to me. And then we kind of just kept going from there. And you have to keep providing value to each other in order to kind of keep having those conversations. So I did dial down here because I have relationships in this space. And then if I can get behind something, look, we look at hundreds of businesses a year. We get behind 10 to 15, maybe, right? And how many of those are going to be successful? That's another, a sliver. We run on the model that 90% will fail. People say 70, it's really 90. You need that 10% to knock it out of the park. And we've been fortunate that things have, and given us flexibility that we can then sit back and look at, be very selective now moving forward, which was not happening 3 years ago and during the pandemic. There's people are giving money for anything. When you have a Series B or Series C round and they're getting 100% return on their fund, that should never happen. When you're operating in the 5 billion range, you get your fund returns the fund, which means it just returns the entire value of the fund at 10 billion. That should never happen. Those should happen only in smaller funds. They should only get like a 10 to 20% return up there. But it was happening because there's too much capital in the market. Now it's efficient. It looks like we're gonna have some opening up in the markets again under this new administration. So capital will become cheap, which will also mean it'll be higher liquidity, but probably performance 10 years out, we'll see. We're going to fund a lot of BS that we shouldn't, because we all have FOMO. We're going to back every AI play later on today. So, and Craig, to kind of get more to your point, there's a gentleman that was an executive at Apple Music and Spotify. He's in the AI for music space, blockchain playing. Because one thing I saw that's a necessity. You try to solve problems. It didn't impact me as much, but I know artists that, hey, if something airs today on CSI New York, they're not going to see the residual check for 9 months. But we're trying to get it to a place on blockchain, airs today, paid today, which you can do seamlessly here. You just have to get it distributed properly. So he's coming on the podcast with another guy who toured with, I think, Duran Duran and, Stone Temple Pilots and all these groups back then. He was a big rock hit. I love him. He's great. He's a great buddy of mine. And so we're gonna have a good conversation, and I don't know, it's gonna be fun. So we do that kind of stuff, but we can unlock value for each other because we have relationships, because we know these kind of people, right? So that's how we can do it. So yes, intricate, absolutely nuts space to be in, but it's kind of the space I kind of know well, where I have relationships to unlock value for people the most.
Yeah, hi, Atul. I have a question for you.
Yeah.
Just a double click on what kind of investments you're looking for. Are they tech-enabled devices or software that works with the film and entertainment industry, or specifically scripts, or just a little bit more detail would be great.
Yeah, so I'll get in and out of the quick one. Rasa Film Fund, we look at scripts that are around that kind of thesis I put out there first a little bit ago. So that's that. On the investment side, we would love to find the next Netflix or the next. I'm staying out of the fantasy sports arena. We've played in that space, but I think it's, there's the house always wins, so that's a good play, but it also can lead to really bad behaviors and people, and it's unhealthy behaviors. Unfortunately, if someone has any other kind of physical substance problem, family or friends can quickly identify it. If they have a gambling issue or something, sometimes it goes unidentified and it becomes a major problem. So we're just not a moral thing, but it's kind of just playing out of space because I haven't seen the returns and then the moral impact, whatever that is. What we're looking for is, I would love to see things that get an athlete to perform better on the court, on the field. So things like, perfect examples like, okay, when Steph Curry won the MVP, he was already a phenomenal three-point shooter for 10 years prior. But he used this app where they set up like 10 cameras and he shoots thousands and thousands of three-pointers, and they could tell when he's this far from the rim, his when he releases the ball at this angle versus this angle, he has a better probability of it going in. So they practice that. It's all AI generated data that and it tells them, and then they analyze that data and implement it in the workout. So I would love to look at those kind of things. We get less involved with nutrition in sports and space. I know there's a lot of athletes that get done that even in the cannabis space, a lot of athletes are there because their bodies are beat up and they found this is a great way to recoup. I love that story, but it's just not a place that I can unlock value for you as much. So anything in that tech space, getting an athlete to perform better. We are working with some telling stories. Now we're kind of the merging of the two, the film fund and this, like, hey, let's tell stories because there's great stories. There's this huge need right now. You've seen what Netflix has done, Drive for Survive, how it's driven that sport. I was hoping Breaking Point would do the same thing for tennis. I'm a big tennis fan. It did not. They canceled after 2 seasons, but then you saw the grueling lifestyle of a tennis player. They're on the road 300 days a year, and there's 4 tournaments most of us know about, but there's so many other ones you don't know about, and they're just on the road, consistently recuperating, rehabbing, and then playing. And that's why when someone's a top seed there, it's a grueling lifestyle, right? And so I am looking at telling sports stories because right now, I can't afford an NBA team or an NFL team, but we're trying to get into female sports because I think there's great stories there. B, the valuations are more in my playing lane as well. So we're looking at a lot of things there as well. And I work with a lot of family offices and other venture groups. Venture groups don't see each other as, competitive rivals. We kind of all need each other to play and mitigate risk because we take a lot of smaller bets together. So venture groups, some hedge funds, but family offices really want exposure to the space because they do their typical real estate, philanthropic work, and then they want crypto. And now a lot of them, there's the yin and yang. They want some venture exposure, and it's going to creep up again now because they want that alternative asset exposure. So those are the kind of, does that answer your, I always kind of go on tangents, Bonnie knows this. Did I get there?
That's
Sorry.
really helpful. It is. And I guess in terms of what stage the businesses are at, are Series A, seed, and that's kind of what I'm sensing.
Great question. So C to C or Series A is where I would plug it. Yeah, because depending on who comes in on the deal, we can Series A. As we look at some of the teams that we're looking at, it's going to be like, if you look at check size wise, it's going to be like Series B level, call it that. Because that's what you're going to need at the team ownership level. But that's kind of where we play. Again, not the NBA or NFL, but more the women's athletic sports. Because I think there's just a huge space. Even my boys who play travel basketball, they're young, but their coaches say never watch the NBA. They don't listen, they watch the NBA. But they said don't, because that's not watch WNBA or college basketball, because that's true athletic team sport play. And that's where you're going to learn the game better than watching LeBron's 85-year-old self dunk again. He's a beast. I'm not knocking him. But, it's not, you learn more from the other collegiate programs or the WNBA than you would from an NBA program.
I love college basketball.
Yeah.
Yeah.
No, it's funny you can say that if you look from a skill level, the women are much more skilled than the men. And my son played college ball. He's pretty good. But when he was younger and would go to a camp and they had boys and girls there, they'd say, take a 5-minute break. The girls are working on layups, foul shots. The boys are doing half court hook shots. It's a different mindset. But what I did want to mention to you, to when you were talking about projects, I just posted to everybody. My acting coach is also director, producer, filmmaker. She has this project star called Heroic Episodes, where they make short films based on veterans. So if you click on that, she made the first one, and I was kind of supportive in her. And like, if you're looking at something that seems worthwhile, that's a project she's doing. And obviously investments going to allow them to continue making the films. And I thought that'd probably be a good thing for Netflix. So just you get a chance to just click on that link and you'll see what she's doing with that project.
Definitely. I opened it. I'll look at it after. Yeah, that's awesome. Thank you for sharing that. Any relation to the 49ers quarterback, Purdy?
On a more general level, what are the attributes and characteristics that you look for in a founder and their IP that pulls you in and just gives you a sense that this could indeed be a more successful long range collaboration with you and your partners and associates?
And so that's a great question. And everyone has we come at it from different angles, but we always end up in the same place, I think. So the great question. look, the idea generally when it's pitched to us, they're looking at it from a certain level. Hey, it can hit this market at scale, but it's right here, right now. We're solving this problem in our region or our city or whatever it is, right? Often the idea pivots as we get involved, kind of like us so-called experts. Again, I'm not going to look at something in health tech because I don't know how to distribute that. But if it's in my domain and it fits our thesis, then I think I can share some information and help you get to that, the field goal sooner, the touchdown, the end zone sooner. So the idea pivots. So we look at the founder, and you've heard this probably a billion times. The founder, I look at it as a bullpen. We drop you in a bullpen, a bull pit, whatever it is. And the only way out is for you to, there's a marketing person, a tech person, financial person, salesperson. They don't know anything about your business, but if you can convince all of them that this business will make sense to solve this problem in the market, and you are the right person to take them out, and they follow you out of that pit, that's kind of how, so you need to have that kind of tenacity. And we know that market changes. So the market dynamics, hey, if the administration had gone the other way, this is not political at all, but like, there's going to be certain unlocks as far as in the markets, right? Efficient, not efficient, anyone can have their own take on it. But we know there's going to be certain dynamics. So the founder has to know how to play within those dynamics in the market. They have their idea that they're trying to force through and get consumers to kind of, first purchase their service or product and then come back and be repeated customers. So we're looking at that CLV and the CAC, the lifetime value of all of these customers, not just a one-time, one-off transaction. So we want to make sure, are they going to figure out everything they can to execute on the idea and then pivot with the market as it calls? So that's what you want, that founder that's tenacity. It's going to run through a wall to get their business, her or his business, up and running and scaled.
Right.
Did that answer your question? It's kind of what we're always
That's a
looking
good
for.
answer.
Okay. And it's, and what, sorry, Catherine, I'll just add up to Carrie's point. It's incredibly selective. So people are very nice to us when they want capital from us, and they're hitting us up all the time. Then so Warren Buffett can't invest in everything. So for damn sure I can't, if he can't. So we have to say no 9 times, 10 times as much as we say yes. We have to be incredibly selective because our whole model runs on hitting it out of the park. Not just a 10x, not just a 10% gain or 20, we need 100x, 200x, because we know a bunch of these are going to fail. So you're going to hear no's from us a lot, and not because we're horrible people, just because we know we have to return capital to the LPs as well. Catherine, sorry.
No worries. So you mentioned at the very get-go about that you have a fund or you've invested in the past, and I don't know if it's open now and if you're open to more projects, but South Asian female driven.
Yes.
Is it only for original new stories, or are you looking for projects that are currently in process and needing funding now, but South Asian women in particular?
So that's strictly for the Film Fund. Rasa Film Fund is that. Yeah, Catherine, your question. Yeah, so right now the iteration is South Asian female storytellers, right? So, and they can be it can be pre-production, it can be in production. We're willing to tap into that. We've shown our for it now. After year 2, which will be 2026, I hope that we expand that beyond just female storytellers. I want it to be female storytellers, right? There's a lot of things that we want to get involved with. We were just small, so we were just testing each other. I'll be honest, us 4 were testing each other out. We love the dynamic. 4 more folks are coming on year 2 as far as LPs. We'll still be GPs in a sense. And then year 3, we're looking at 50 to 60 additions if it plays out the way we want. But yes, so given your question, we'll look at it any stage. Sometimes we provided finishing funds because we knew we probably wouldn't earn a return on the current project, but she's been involved with so many Oscar-worthy things. B, we wanted to have dibs on her next project, which we saw the script for. So that's kind of why we played in that space. So yes, to answer that question.
So you would be open to submissions right now?
Yeah, I can send a link to you.
Great.
I don't have that link. I'll send it to you later. I have it, but keep talking. As we do, I'll pull it up.
Thank you.
I have a quick follow-up question. As someone who always enjoys listening to people like you and wordsmithing, especially since you're in podcasting, right? So it's a focus. You alluded kind of off the cuff about communities is not a word that you use. Did I catch that? And is there something
I like
that you
community
favor?
or networking is a word I don't, because it's just so cliche, but we have to use it because it's the best word for it. But community is, I try to bring it that way. But yeah.
what do you favor? So like, again, if we're talking out there, again, because you use it, right, and you're wordsmithing, what do you feel is a better way to talk about connecting and or community? What is there a thing that you favor better?
You mean from a word perspective?
Yeah.
Strictly, look, if you were to put it out there, if you were to meet 1,000 new people, if you say it's great to network and meet people in your space, they're going to immediately understand what you're saying, right? If you put a community out there, they're like, whoa, is there some work involved that I have to build something here? So they may be apprehensive to jump into that. I'm just saying, I've said networking, I'm old enough where I've said networking a billion times. So I'm just trying to use a different word, a synonym, a sense. But community is really what it's at, where it's at, because I've seen some companies where they build the network effects of any of these companies, right? So that's basically community-based, but network. So it's bringing both of those plays in. You bring an app and you launch something into the space, and you have people. They're gonna invite their friends and colleagues on. They establish relationships there, and they're gonna expand it to their folks, and they're gonna have. So that's how you have interactions within your app, whatever it is, right? So then you're having the network effects and so you have a higher probability of being around 5 years from now versus the one-off transaction play. I'm trying to sell you shoes out of the back of my truck type of thing, right? So yes, we're always going to go down that tech lane where there's network effects and community. So I don't really know how to answer your question. I'm just preferring community because I've said network a billion times. That's the only thing. There's nothing godlike beautiful about what I just said. It's just a
Community
preference.
is the mechanism for network effects to occur, right? Is that
Damn,
basically
John. That's awesome. Say that again. I'm going to write that down.
Community is the mechanism for network effects to occur. When you say networking, it's just like, it's transactional. It sounds transactional, although it's probably a more humble way to say things. But when you say the word community, it's aligned self-interest that drives community, and therefore the network effects kind of manifest automatically.
So what he just said is what I was trying to aim for. That's the feeling I was going for, but he put it together the way I needed to say it. I can't do it.
That. Thank you.
Appreciate that, John.
Yeah,
I just wrote that down. I'm going to give you credit for that one.
I feel like
networking.
Awesome. I feel like networking is, you hope that it leads into community.
Yeah.
And I feel like I'm going to network, and then I hope it comes into some kind of community, like
community just feels more resilient,
a reciprocity and consistency. So yeah,
it feels more honest and resilient, right? And it feels like there's an exchange of not just a transaction, but of a human interaction in a sense.
It's an aligned self-interest, like I said.
Damn it, this guy keeps coming up with these one-liners. You're like turning it on me. Write this down.
Everybody knows what they're there for, but like, let's find a way to align, and then we can reciprocate and create a relationship, and that's how the community and network effects kind of automatically manifest.
Oh, I love that. That's, man, everything you said is just good. All right, it's great. Thank you. Oh, Ian has his hand up. I'm sorry.
Yeah, well, I'm just going back to some of the remarks you made earlier. You mentioned there's going to be more capital available likely in short term, and this might lead to some froth, basically, was your implication. And then you mentioned Warren Buffett. Well, Warren Buffett seems to be getting into cash.
Big time. Big time.
And he says, like, the apparent reason is because stock market is kind of out of whack with GDP. Like it's risen a lot faster than GDP has. So how does that affect your investment thesis and prospects?
So it does and it doesn't. So, okay, capital being available, and Patrick, you can allude to this, right? Because you're in the iBanking world. So capital being available in markets will always, if it's frothy, then people will take chances on these alternative investment vehicles. When there's less capital involved in the markets, they're going to go to flight to quality, right? So play both is what I'm saying. I fortunately, all I knew was tech. So I backed companies for 15, 20 years, Apple, Amazon, Google. That's all I knew in the public markets. So hedge funds are basically doing public equities, what we're doing in the private markets, but we're taking a bigger risk. I would steer people towards, this is not even the right answer, but what you're asking for, but I'm going to get to it. I always steer people, get your feet wet in the public markets first. Let someone else do the work. Tim Cook's doing a great job. Let him do his thing. And you just invest in his company and you get to collect because look, that can change your life. And it has, right? So that gives you more, if you just invest in those things early in the right place, or an ETF of that sort, whatever it is, right? A low risk one and low fee. When there's an abundance of capital in the market, we become inefficient, which is going to happen. And I'm not taking a political stance here, but you can see one side wastes too much on silly things. The other side does as well. They're both idiots. I'm sorry, but no, I play along the line of the centrist, meaning Daniel Puder and I had a great thing about it. He leans, he shared which way he leans, and I'm a centrist in a sense. So I said, look, let's play in the center. All this fringe crap where everyone's attacking each other, let's stop. Let's just play in the middle, because America would be number one for another period of time if we just play together instead of attacking each other, right? So that's from the angle I'm coming at it from. So you're going to get some of these things are going to be inefficient. Some programs will go away. Hey, I know, I shouldn't say this because it's going to be out there for a while. I'm going to pull back from that. I'll do it on the pod because, but not here. I'm a very un-PC guy. Bonnie knows this, but it will impact our markets when there's an abundance of capital. Family offices, look, that's about 15% of the money that comes into the venture world. Hedge funds are about 20%-ish. Pensions funds and all these, they play here as well, right? That's like about what the number is like 30-40%. But when you get family offices, you can tell by the temperature in family offices how they want to play. Even our group, our family, the way we invest is depending on what the market is giving you. If you know there's an abundance of capital, we're going to invest more. And you're going to look at things that aren't in your traditional realm, the safe, the treasury, the T-bills and all that. When things are a little trite and T-bills are offering something, you're going to go that direction, right? That's just the complete opposite direction. Now, with a lot of the policies that we know are being set forth, some of them are inflationary, no doubt about it, right? And then if you I listen to anyone know Josh Brown, he goes on CNBC a lot. He runs the company. He's the CEO of Rutgers Management. I was just listening to this podcast this morning. He had a gentleman on who was basically saying, look, people, and Ian, you alluded to this, Warren Buffett's parking in cash right now. People see a 10 to 15% correction at some point because they're going to inevitably, if they're trying to disrupt, they're going to break something. Not a take, just not a criticism. Something's going to break and that's fine. We like those market inefficiencies because then we can enter and then gain in the upside, right? As long as you don't break things that put America back. That's all. That's all I'm saying. So that's my non-political political stance. But so did that answer your question, Ian?
Yeah, no, it makes sense to me. And
Patrick, you could probably allude to some of this too. You could probably jump in and clean it up a bit more.
Yeah, I mean, I think that there was definitely a valuation increase in the last few years, and I think there's a gap that I hear everyone talking about at this point. I'm a little removed from the kind of seed stage businesses beyond, interacting in these kinds of events, but it's I think that's what I hear a lot of, and that there's just some folks that have entered investments that maybe are higher valuations than maybe what they could exit at this point, and that's creating kind of what you just alluded to, Atul, this feeling that maybe there's a correction at some point. But
may I tag on to that?
I would be very, very curious to hear what you think about that and when and where that might be, if it's even possible to think about that.
Well, can I share what we ran into 3 years ago? So basically, when we're pitched a company in a typical healthy environment, we have 3 to 4, let's say 4 to 6 weeks of due diligence. We look at a company, then we take it, our team internalizes, we do our due diligence process on it, and we navigate that. How is that going to be projected against the markets? Because we're in the business of telling the future. These founders are in the business of shaping the future. We're in the business of trying to help them tell it. Right? They're the smart ones. We're just trying to help them get there faster in an efficient manner that we can build a business around it. So we used to have 4 to 6 weeks, which is now it's back to analyze a deal, look at market trends, look at what's going to be happening with the consumer, look at all the metrics. They provided data points as far as if they're in market, how are they performing? 3 years ago, they would pitch us. As we were leaving the meeting, they would say, hey, are you investing or not? And then they'd expect us to make a decision in 10 minutes. And if we didn't, some other group would come in and probably give them capital that day because capital was just too liquid. It was abundantly available and it shouldn't have been, right? We all did well under it, but then a lot of these venture deals, which are trying to predict the future in an unknown market forecast, they inefficiently deploy capital and it just leads to a ton of problems. That's why you saw a lot of the way to see if a venture fund is successful is if they launch a second fund, right? And if people want to park capital with them again, if they return their fund the first time and they launch again, it used to be like a 50% hit rate. It was down to 15% as of now because those people that raised capital before, that's more than a third off, right? It's a third. It's less than a third of what their hit rate was. So that's a sign that's saying not the right people are enrolled. And if we're efficient, proper allocators of capital, our goal is not to return and maximize every dollar that you can achieve. If after 4 or 5 years we can get you here, and then the next 3 we're only gonna, if we can get you up to like, I'm putting numbers out there, 40%, and then the next 3 years after every dollar that we put in, we're only gonna get you another 5% incrementally. We're being incredibly irresponsible to our LPs. So maybe we should tap out now with this liquidity in the market, put it into someone else's hands, secondary market, whatever that opportunity is, another company, issue share somewhere else. Someone else or a larger company can then take in the next 5 years, their dollar can maybe maximize, get another $10 versus our dollar would only get them another $2. So we should we should hand that off to someone that can be more efficient about it and scale it properly, because then all that capital comes back into the market. So it's this nice loop that we continue to see. Am I becoming too academic? That's kind of where I go. But I like looking at markets this way. And does it make sense what I'm kind of putting out there?
Yeah,
That's kind of
it makes sense to me.
what I would feel. And
Okay.
it's really interesting to hear about, how quickly you were having to make a decision. It did feel like valuations
It's unhealthy.
were there's just a lot of cash going after a few number of assets, and I keep hearing that the good assets are gone. I don't know if that's true or not. And again, this is not investment advice, but it's like, who knows where things are going. But I think there should be some more opportunities coming up soon.
Yeah.
But I'm curious what your LPs, in terms of the typical investment classes, you're a bit different from that, which I think is probably interesting to LPs. But I'm curious which one. You said some family offices were interested, but just curious if that's athlete related, or who's interested in investing with you guys.
Yeah, great question. So now that we're in the syndicate space, which we really enjoy, just to give us some more flexibility in life, it's ultra high net worth individuals and family offices for the most part. That's where we're at. And generally it's just our peer group. Essentially, we have people that are interested in the space. They have their own day jobs. They would like to have some exposure here. And then we've had success in the past, so then we kind of just do it. Not every one of these things has been a success, but some enough have to we can supersize if we ever choose to eat at these crappy fast food places. But we don't. So yes, it's in the syndicate thing, it's ultra high net worth. In the venture group, you're wide open to whoever wants to park. But family office, I think because we had relationships there, essentially, it was just an easy play. So they would see the value and the trust. So that was easy. Going back on the word exposure that Craig's gonna call me on. But there's that factor already in place. So then you kind of go where they trust you to deploy the capital efficiently.
That makes sense.
Excuse me. I was gonna add on to something to that. I forgot it though.
Can I ask a question real quick?
Sure.
Yeah.
Yeah, I was wondering if anybody here, specifically you, Atul, actually. We were talking about American football earlier, a lot of American football. I actually play rugby, and it's a really rapidly growing thing in America with Major League Rugby and all. And I'm also in touch with somebody who's an investor in women's elite rugby, is a growing women's league here in America. So I was wondering if anybody, again, specifically you, Atul, have any thoughts on that, or would potentially at one point want to get interested, see if my contacts would be able to collaborate with you. Like, I know the owner of RFC LA here in Los Angeles, the pro team that just started up here in about, was it 1 or 2 years ago? I know him. And so I was just wondering what your thoughts are on that, all that.
I'd love to open it to everyone, but I just sat on a panel with someone at a family office event last week, 2 weeks ago, and she played professional. Okay, they didn't have a female hockey team when she was younger, so she joined the boys and she beat them all. She was like destroying them. And then she became a coach for like 24, 25 years in Connecticut area. And Digit's her name, Digit Murphy. So her and I are going to be looking at what she's trying to do is she sees it. So the value in all of these isn't the ticket sales, the merch sales, it's the media rights, right? So what they have had a problem with Caitlin Clark and Angel Reese, we've seen the phenomenon that has led to the WNBA being what it's finally, I'm calling it the Larry Bird, Magic Johnson moment for the WNBA. I hope they capture it. And basically it was like, Larry Bird and Magic Johnson, because the NBA was complete trash before they got there. They came and they brought the rivalry from the collegiate space. And then it became popular in America. Michael Jordan took it global. Then the LeBrons, the Allen Iversons, the Kobes of the world kept it in an amazing way. And then international players are actually the best players in the NBA right now are probably international players. If you You can kind of say that, right?
Outside of your main LeBron, like you're saying, yes.
No, but he's not. I don't consider him the best. I think Serbian players are more, right now, as far as not the, they can. Who's winning? So long, I guess you could say. And not knock it, but LeBron and Steph have been the face forever, and they should, as they should be, because they're amazing. But they're now looking for the next tier. In women's sports, what she's trying to do very brilliantly is each sport can't go and get an NBC, Comcast deal, media rights deal. She's trying to aggregate all of them. So she wants to speak to all these. Or I think she's speaking to someone in rugby. Rugby, tennis, ice hockey, basketball is already its own behemoth now. It's the valuations are getting nuts in a good way. That's great. They're finally getting what they deserve because they've had brilliant players all along. It's just now they're getting the exposure they deserve. So what she's trying to do is aggregate all these female collegiate sports, or I'm sorry, professional sports, and then hey, not this one has this many, this one has X amount, at Y amount, Z amount. She's aggregating all of them and said, look, we have this portfolio of amazing athletic prowess that we could put into, and so she's trying to get a media rights deal. So I would love to have that conversation with you offline. We'll bring Digit in there because that's exactly what she's trying to do. And I want to help her get there.
I mean, for what it's worth, MLR is a very centralized structure compared to like the NFL or NBA, right? It's all owned centrally, and then they have rights and vote within the MLL entity. And so that would be a good opportunity for what she's doing because it is so centralized, right? And I can't speak for WER Women's Elite Rugby because I just met one of the main investors recently through my business school, for what that's worth. And so I could definitely help connect a lot of people together if that's something you're interested in. And it's a rapidly growing, if you just do the little Google searching, can't be sure how accurate these articles are, but it's a very rapidly growing sport. So that's definitely a market opportunity to get into, because it is so rapidly growing and is in its nascent stages.
So if anyone knows, could we maybe Andrea, if you could like put your thing on mute. Thank you, appreciate it. Hey, John, to that point, or anyone else here, I would love to, look, all my friends have been, they're male athletes. I mean, just this, unfortunately, I mean, whatever, NBA and NFL, because I brought them on the podcast to share their stories. I would love to get more female athletes on. So if you want to come on with one of them and we can share that story, because we have a pretty global reach, because we have a lot of groups backing us and promoting to their networks as well. So we have a global reach. So these stories get out there to a ton of people, and that often brings investment dollars or sponsorship or something to those leagues or people as well. I've had a lot of people make deals up from the podcast from listening just on their own, which is awesome.
I mean, I'm not too connected to the women's side, but I am connected to the investor, like I said. So I could further that effort for you. Have you heard of Ilona Maher by any chance at this last Ilona Maher? She was, I think it was the Rugby Women's World Cup or the Olympics or something like that.
Okay.
They won, what was it, second or third in the world? This is right. It's one of those big events. Okay. Ilona Maher, she's definitely someone to know.
I'm looking at it right now.
ILONA and then MAHER. Yeah. Beast of a woman, physically and like her soul, everything about her. So, and she was on Dancing with the Stars, I want to say.
Oh, no way. I'm looking at it right now. Yeah. Oh, yeah. You know what? So Digit brought her up. I don't know her up. I didn't, you're the second time I'm hearing about her. She's 5'10", 200 pounds, just muscle. Looks like awesome. It says right here on our Wikipedia page.
She's an amazing person.
Oh, yes. Let's chat.
I don't know her personally, but okay. I could connect you with the WER where she will likely be playing, is what I'm saying.
And I want to connect them with this other group, and I think they could do something really interesting because they're creating like a whole NIL deal for the collegiate folks, and then this whole agency play, and they're launching the first, Digit's partner is launching the first then hockey team in China, or they've already launched it. It's very recent, nascent play, but they're doing some pretty interesting things, and it's exciting. I want to see that side pick up because they do deserve those dollars at the male. Because look, NBA is a declining asset. The viewership has gone down since 2016, but the streamers got in, so they got this new CBA deal, media rights deal at $76 billion. Let's see what happens in 10 years from now when that deal's up for grabs again, 11 years. It's a declining asset. The viewership's been going down steadily since 2016, right? But they got those dollars because streamers came in and they want live sports, right? So there's a huge appetite for live sports right now.
Yeah, and I for what it's worth, I'm with you when it comes to promoting women's visibility, I guess you can say, right? And so I'm definitely going to connect with you on LinkedIn, and then we'll have a further conversation.
That's awesome. That'd be great. Thank you.
I'd love to jump in on the conversation as
Oh, I
well,
love
because
to,
I've been
yeah,
working on various sports
yeah.
teams. So I think yeah, it might be an interesting. I'm also a little bit more involved in the men's side of things, but it would be nice to see more you know, attention placed on the women. So yeah, where are you guys based?
Oh, Andrew, you should
Oh, yeah.
introduce yourself.
Okay, I will. Yeah, so I work for a family office because I cover US tech opportunities for the family based in Hong Kong. I've gotten to know a lot of American family offices, and more recently, the big things that club in on are, is sports team ownership. So that's something of a great deal of interest to us and to some other families. And I know some of the families that are involved in, they already own some stakes, but they're also gunning for more. And then in addition to covering earlier stage tech investments, we've been going after some pre-IPOs. So,
Do you know about
yeah.
the hockey league that's in China? Right? I think it's
No, not so much in China, but more recently, I know a few teams quietly for minority stakes, trade potentially, because some of them are owned by, personal friends. And so, but yeah, but in terms of hockey in China, totally news, totally news.
Yeah. Same. I just learned about it 2 weeks ago on this panel. So we're exploring it. We're excited about it. But I want to do more of the sports here is what, because I understand this market better. So we're exploring that. And the opportunity lies with the higher valuations and margin plays for everyone is in female sports.
Yeah. Where are you based? Where's
I'm in Jersey now. Yeah.
Okay, cool.
Yeah.
And John, where are you based?
I'm in Los Angeles.
Okay. I just landed in LA, so
All right, there you go.
I'll link up or something. Yeah, cool.
Wait, did you share your LinkedIn in the chat or anything like that, or do you want to?
Yeah, I'll put it in the I'll put it in the box.
Sounds good. Thank you.
John has one-liners. You should get those.
Good ones.
They're awesome.
Jersey based too. Exit 3. For those around this area.
Bergen County, right here.
Is that like Secaucus
Bergen.
area? Is that Secaucus?
I'm closer to Paramus, Hackensack. I'm in New Milford.
Oh yeah, so I used to live in West New York for a while, right in that Port Imperial area, right by Weehawken, by the ferry station. I used to live right there. Now I'm in Princeton area. So yeah, I need more violence and fire trucks. It's very quiet, but I have a lot of family down here, so they love it. My family.
My
loves
cousin's in West Milford, right on Echo Lake. The whole family's from there. Westwood,
nice.
Washington Township, Perth Amboy, Union City. Everything's. I'm the only one in South Jersey.
Okay, gotcha.
I'm literally right off Exit 3. Go off and like 2 miles, you're right at my house. So
that's
very
awesome.
convenient.
Yeah, I used to love being up there.
Yeah, convenient to the beach too, right?
Yeah, we have a place in Ocean City.
Yeah.
And we can just jump right on the Atlantic City Expressway. And at this time of year, I could be there in 45 minutes. It's pretty convenient. During the season, it's about an hour. So, I mean, I'm near Turnpike, Expressway, 295, Philadelphia. It's very convenient. We just went to Washington, D.C. The other night for Memorial and came back yesterday morning. It was like 2.25 hours. It was just nice drive.
Yeah.
So
that's awesome. And then I think
where are you at in New Jersey? You said you were in
Princeton. Yeah, let's all take a moment to cry for me now because it's just not.
Oh,
it's nice.
You know what?
I have a lot of family down here.
I drive through Princeton and then I was like, why would anybody even want to leave? Like, I wouldn't even have a shore house. It's just so nice. I would just stay there.
It's beautiful. It's beautiful. But like when you come from there, I was 15, 18 years in the city, then West New York, right across.
Yes.
So our family was never going to move up closer to us. And our kids are growing up with their cousins and they love it. So we're going to get a small place up there again because I need it.
All right. So will you keep your Princeton house too, or
we'll keep the Princeton place and then because they love it. We moved here during the pandemic. We sold that place during the pandemic, moved down here. And now because of that, we're only going in like twice a week. And then 3 times we're just going nuts working from here type of thing. So, but yeah, that's it. But I want to get a small place up there. Hey, we'll just Airbnb it out. It'll have to be on the Jersey side because you can't do that in New York City anymore. Yeah. So yeah. And then we'll use it once or twice a week, weekend.
Even the Jersey side, we got friends in Hoboken, but if you can get a place, reasonable rent, or something. And West New York, my mom spent time up there, born in Weehawken, I think. And
Yeah.
all those places.
Yep.
Atul, I had a question. Do you have any book recommendations? You seem to me like somebody who
I got a whole bunch.
fair amount of reading.
But yeah, I can share it with you. But I essentially, when people share with me, or I keep a book list. There's one. Are you looking at adventure side, or what are you looking at?
Yeah, it's hard to say. I mean, like, there's so many things that I'm curious about right now. I mean, definitely, I find there's not very many good books about venture capital. Like, I'm not too crazy about that venture deals book, which everybody recommends. It's just, it's missing something. So I'm always looking for other suggestions.
Okay, so there's another one that kind of encapsulates all this. It's not pure venture, but like it does Seven Powers, the Foundations of Business Strategy by Hamilton Helmer. I can,
Okay. Haven't heard of it.
That's an interesting one. You have heard of it?
No, I've not. No.
And there's this another, she reminds me of Bonnie. She has high tenacity. Cody Sanchez, have you heard of this person? I don't know her,
Yeah.
but I heard her on my friend's podcast, and he has a huge podcast. It's called Main Street Millionaire. It's probably very trivial. She looks at buying all the non-sexy businesses, laundromats, and all this kind of stuff. So that's a good area to, so dry cleaning and daycares are huge. The huge margin plays there if you get it right.
Yeah, the first one you mentioned, could you just give me the name?
Yep. I'm sorry.
No, the first one, Seven Powers. Yeah.
The Foundations of Business Strategy. Let me just go find it on Amazon.
Yeah. Okay.
Yeah. And then there's the one that you mentioned, the venture deals one. Okay, I won't say that to you. And regardless of how you feel about him politically, Peter Thiel has a good book, 0 to 1. That's just a good book.
Oh yeah.
I mean, it's phenomenal. I know a lot of people. He's a libertarian, and he and Elon are controlling the government now. I think they will for the next 15, 20 years. But so my friends, I shouldn't say it. We'll say it offline. But basically, tech bros always wanted to control the government, and it's kind of a cool move. Hey, we've crushed it in private public markets. If we can get this aspect of it, we could really run the show. And hey, they're efficient, but they're going to break things, right? So I think, and that's where Elon was on the Dem side, and, they didn't play well with him. So he jumped over to this side. I think he's the one that got him elected. I think his people got him, not making a political statement, but that's the power of technology and the most brilliant minds in the room.
Covering it all today: politics, tech, sports.
But let's not forget that we're talking about the PayPal mafia when you talk about Peter Thiel. And,
big time.
Yeah.
And all these guys are trashing him. Like, David Sachs was trashing Trump just a year and a half ago, and they're back in DeSantis, and now he's in the mix. So it is okay. We should probably cut that out. No, I'm kidding. Put it all out there. I'm an un-PC guy, so I want to. That's my brand.
But thanks for the books. I'll take a look at those for sure.
And I'll share a list with you. We're connected on LinkedIn. Probably I'll share a whole bunch with you. I have like 30 of them right here. Investor Dilemma is a good one. Yeah.
And we have a latecomer, Sing Sing, and I want her to introduce herself.
Sure. My name is Sing Sing Lee, based in New York City. I think I've seen some of you guys at Bonnie's other events. Bonnie is a trusted advisor of mine. I've been on the investment side as well, managing portfolios, CVC, and also in green tech. Now I'm an entrepreneur, and I'm in the intelligent planning space using AI. And I think I've had a couple of conversations with you guys one-on-one as well. I'm looking forward to meeting more folks.
And let's all definitely connect on LinkedIn as well, if you can.
For community building, right, Atul?
Yes, we are. Community building as a superconnector.
Network effect.
Network effects, yeah. Hey, John, what are we supposed to call it? John will let us know. John knows what we should call it.
Bonnie's community is what it is. Bonnie's builders. Bonnie's builders.
Bonnie's builders. Bonnie, you are phenomenal about bringing together just great people. When you ask me, I'm like, okay, I'll be the least smart person in the room, but I'll jump in.
Oh, you're always fun, Atul. And hopefully we can get you back soon when you get your whole series launched too.
I just got to figure out the link part. I mean, it's ready to fly, but I would love to. And then get your feedback on it, any of you too. So I'll definitely do that. And if anyone has a cool story they want to share on the pod, come on, because we have it's a truly global reach. I'll be honest, most of it's UK and US. some Germany, some Asia, but 70% of it's here. But it's if you want to get something out to the world, it's like if we have fun conversations. Like the one later today is gonna be fun because these two guys are gonna be going at it, and I'm the guy in the middle just sipping my whiskey, and they're gonna be talking about blockchain music opportunities. So it'll be kind of cool.
Yeah, and you
they're
might
both-
need that whiskey depending on
Yeah.
the conversation goes, and maybe they'll need it too.
Yeah, yeah.
Also,
Wait,
Atul, I
sorry,
just
what
want
was
to
the
tell.
podcast? Oh, sorry about that. Just what was the podcast? Sorry, I had missed it.
Yeah, it's called The Whiskey Hue. I'll just
You should put it in the chat.
Yeah. I'm gonna put the name and I'll put the link in a minute. The Whiskey Hue. If you just any platform you go to, The Whiskey Hue. And you'll see three guys in there. It used to be three of us. Then everyone's got young kids, so the two guys kind of pulled back, which is fine. But I love it. I get to meet really interesting people and
Yeah,
share their
that's all. I
stories.
just want to tell you, if you're interested in sports podcasts and a few of the others who are in sports, I just posted. My son has started about 3-4 years ago. He started a sports podcast, and it's really gained a lot of traction. They've got some sponsoring and all now. It's called Psychotic and Iconic Sports Podcast. So I just dropped the
love the
links
name.
in, one for the Apple and one for their Instagram. It'd be interesting to
love
check it out because even though they're based out of the South Jersey, they're not homers. They're talking about all sports all over the country. It's not like Philadelphia, just everything for Phillies. It's about just general spot podcasts. And they've had some of the, pro athletes chime in and stuff. So they've done really well with it. And it's interesting.
I
So
love
people
it.
who like
That's
that kind
awesome.
of stuff.
I just dropped the Apple podcast for ours, Apple link for ours, and you can we did one on Kate and Clark recently. You'll see a bunch coming out, a lot of athlete folks and business, and just people who have become founders. But yes, I'm checking yours out, Scott. It's awesome.
And
Good for him.
Yeah, I mean, they just something they wanted to do. He's hoping that someday maybe it'll take off. He won't even have to work his regular job. But
these things have legs, and hey, okay, I'm not making a political statement, but like we saw, this is the election, the podcast election, I think.
Yeah.
Oh yeah.
You can go on Joe Rogan and see 10x the people you're going to see on all these other crappy news networks, right? Like from oh, this is going to sound horrible. Bonnie, you're going to lose a lot of sponsorships when you have guys like me on. But like, I can't watch CNN, MSNBC, or Fox News. They're all garbage to me because they only talk about two guys for the last 20 years, it seems like, right? There's so many other beautiful things going on in the world that we could talk about. But you go on Joe Rogan and you can, in 1, 2, 3 hour section, you can meet what they get attract in those other networks. And in a whole week, you can get them in 3 hours on Joe Rogan or something like that, right? Good for him. Joe Rogan's like the beast that we all want to be in this podcasting game, but he's amazing.
Yeah, and he is open to anybody if they want to come on. I mean, whether you like him or not, so it's if I was doing something big and I could get on, that's where I would go.
Yeah, he's phenomenal. He does it often. I think 3-4 a week, 2-3 a week or something, and then 3 hours each time. It's a lot. It's a lot.
That's where I'm going with my book once I get it published and all that.
Yeah, Bonnie, you could probably just call him and get on.
A friend of mine is friends with him. He knows about the book. He said, whenever she's ready, I'm all right, no problem.
That's awesome.
Pays to have network effect.
Community.
Community, yep. So we have 1 minute left. And I have another meeting, and otherwise we have to have you back soon, Atul, as soon as you get your link up, and we'll continue the conversation.
Yeah, I want to learn more about you all too next time too. I mean, I remember your faces, some of you from last time. I came on the Chris Land event. Was that a month ago, right?
Damn, I missed that.
Awesome.
Chris.
It was the session before or 2 sessions before. If I remember you were there.
Yeah. But thank you. This has been amazing. These are great questions and great. I mean, just the dialogue's awesome. And if we can do more football next time, that'd be great. Just kidding. But but I would look forward to following up with you. Follow up with me, and I'll follow up with all of you. I'm happy to chat. It looks like you're all involved in really interesting things.
Yeah. Speaking of football, someone mentioned rugby. Was it John?
Yeah, that was me.
Yeah, it seems like we can also take it offline. But yeah, it just seems like there's a big push for rugby to come to the U.S. But also, I know an American family that now owns, even though it's a state-owned rugby team, they own a good chunk of the Springboks. So,
okay,
that's actually kind of interesting. Yeah. Anyway, to be continued. So for the next session,
next
Thank
year.
you all.
Thank you, everybody, for being here. Thank you.
Excellent.
Have a
And
great day,
everybody
Wonderful
everyone.
turkey day.
have a fantastic Thanksgiving.
Atul, where do you keep